Good morning, everyone. Microphone check, screen check. Looks like everything is working correctly here. Good. All right, wonderful. Wonderful. Welcome. Hopefully everyone was able to rest up, get ready for the day ahead, all that fun stuff. As always, before we jump on the left side of the screen there, very important to go through the Live Trader Morning Prep PDF. Make sure to read through that. That way you understand everything that's inside there. If you want to get a hold of that, again, you read through it right here. Post it every morning there. Excuse me. All right. I just want to take a second to give a shout out to our latest members that joined overnight and yesterday afternoon. Thank you so much for the support. I'm pumped to have you on the family here with SSFTG. If you aren't a part of the SSFTG family or a member on the YouTube side, check the join button below the stream to gain access before our next private webinar, get access to the Discord chat, and you get that awesome badge next to your name, which of course shows your support, but it also looks really cool. If you are trying to figure out what it is exactly that we're doing here every day, look no further than the Day Trading Academy. You can find that over on SSFTG as well. It comes packed with about 19 plus hours or so of material loaded. And that doesn't include the hundreds of hours of live content that we've got going on over here. Keep in mind, on the YouTube side of things, this broadcast does have between a 3 and 30 second delay. Unfortunately, there's nothing really I can do about that. But if you want to level up to the VIP status, you can enjoy exclusive permanent access to our non-delayed live analysis stream via Zoom direct meetings, as well as monthly VIP webinars, private VIP events, one-on-one scheduling access, all kinds of cool stuff. So whether you're here and you're totally new, or you're a veteran over on the VIP stream, welcome. I'm glad to have you here with me today. Let's take a look at what's going on the news side of things as far as some charts. See what's all happening here. Don't forget to grab your morning DP levels. Those are posted for you every morning for the major 7 markets that we take a look at. And those will kind of give us a guiding heads up as to what to expect. If we're looking at, excuse me, the news calendar here. Once it comes up, there we go. Earlier this morning at 8:30, we had the initial jobless claims. Came out better than expected, 498 versus 540. The previous came out, it was 590. It was revised from 553. There's not really any other news, though. That's about it. Today's Thursday, so we have nat gas news at 10:30. But there's not really a whole lot else going on. So with that in mind, non-farm, looking at tomorrow's schedule, we've got some bigger things on there, non-farm payrolls, unemployment rate, all that fun stuff. A lot of traders might be trying to utilize today as a way to position into that move for tomorrow. We'll kind of have to wait and see. But as we go into the rest of the session, there isn't any other news. We've just got some medium and minors. So let's get that out of the way. Looking over on the NASDAQ, first off, we can see that the market had, a little bit of a tumble, and since then, we've just been kind of trying to migrate our way back down again. Realistically, this was one heck of a blow-off, and that move down, it got stopped in its tracks and reversed right back up for a near V bottom, but they couldn't quite get the job done getting completion. That doesn't necessarily mean that the buyers are giving up. But that means that we have to approach this with a little bit of a different mentality. It's not a V-bottom anymore. This is more likely, if it is going to be a reversal off the lows, a higher low reversal now. We still haven't seen any proof of that, but that's kind of the mentality if you wanted to be a buyer here. Looking at the overall trend, the market is, it's down, right? We had that massive overextension away from the moving average cluster. The market came back to the moving average cluster. It's not a surprise. It comes back to the average. It's a reversion to the mean. Now that it did that, we're going a little bit more sideways. So the part that I kind of want to keep an eye on here, while the market is sort of chopping around, obviously it spent a huge amount of time up there, but this most recent leg down from the top to the bottom, what we're great, perfect. Let me go to the next day, I guess. One of these days, my volume will work without any problems. Anyway, the majority of the volume is up at the 13,905s. So if we're utilizing a bit of common sense here and sideways action in a very bullish market before that, that could very easily be buyers trying to buy the move. It could also be sellers looking to rotate the market down. If you look at where the POC is in comparison to where price is, well, the majority of time was spent below that area. Realistically, depending on when that POC was plotted, it seems like the sellers were dominating that area the whole time. But now that we've broken away, if those were buyers, or if there were buyers in there that got stuck, they got absolutely railed. Huge stop runs underneath the lows, big VVPs, just total lack of volume until they finally built up a little bit of a zone down here. And now we're seeing marginal, very marginal accumulation on the bottom. Now, as we continue this further forward and include everything going into today, we can still see that the POC is up at 905. So if sellers are short from 905, they are still very happy. And if buyers are long from 905, they are still very upset. There's not really a whole lot else in between there. The big zone that really stands out is this huge VVP that hasn't had a chance to kind of backfill. The market doesn't like it when there's a big zone like that that has a non-transacted volume. The job of the market is to transact a volume. That's its purpose. So when there's a point of interest that has none, it kind of creates a somewhat of a gravitational pull where it wants to suck the market back to it. Kind of the same mentality of a gap fill. It ends up being a self-fulfilling prophecy, but this becomes a major zone of interest when the market comes back to that area. If they hold underneath it, then it's likely resistance trying to go back down. If it breaks above it, then they're probably trying to get back up to that 905. For now, the POC is at the top, which means that if this does go flying higher, there is a very strong likelihood that we've got resistance up at the top. Those buyers who got stuck there, they're going to be looking to jump ship. Now, if we shift the POC down, that would be a totally different scenario. Buyers maybe trying to come in with a higher low, etc. We haven't had that yet. So from a structure standpoint, we're just kind of in a wedge, not really doing a whole lot, but definitely a point of interest on that V bottom, maybe. We'll see. Over on the S&P, technically this didn't complete its V bottom either. A completion of a V bottom would require it to break above the top of where the V started, and that never happened, or at least not yet. This could very easily be a small little flag before a continuation back to the upside. You can kind of see that playing out. And if we look at the overall movement, even on these micro dips, there's still the market saying, well, you might want to be just a little bit cautious here. They're running into some trouble. So it's trying to find a reason to go higher. It just hasn't really found it yet. So as it stands, the rotation off of the lows is an L5, which, I mean, that's what they need to get this thing going back to the upside. L5s are perfect. And you can see it spent very little time down there. So buyers are trying to figure out, all right, if this is an L5 and it is going to go higher, then we should see realistically volume POCs of the sellers trying to sell up here, right? Because this was a nice move down. They're going to look for continuation. Sellers selling into the move higher, seeing them try and seeing them fail. That's when it's time to go long. Right now, the sellers are still trying, but we haven't really been given a whole lot of proof outside of that. If we look at the impulse leg to the upside first, doesn't show me the correct volume. Wonderful. Let me go back. There we go. Okay. Top weighted POC. Sellers so far are responding, right? So you can see what has to happen here. We have accumulation volume up into that move. The POC's at the top. It's currently being defended. That would suggest that sellers are trying to push the market down. They're trying to hold it down for another leg lower. Probably to get one of these legs to actually break a new low, because every single one of these has missed it. Kind of akin to Ethereum in that sense. So, I mean, buyers had a very small window of opportunity to strike down there in the L5s. And the next opportunity is going to be the sellers trying and failing. Right now, they're not failing. So we've got to be on the sell side, even if I don't necessarily want to, as long as we're underneath that volume node. C'est la vie, right? Over on gold, we've got more continuation to the upside, although in a very disgusting way. Jeez. We had that rotation up to a new swing high, then down to a new low, then up to a new high, then down to a new low, then up to a new high. And then things started going a little bit different here. We got some back and forth kind of... Oop, they didn't go that way. We got some back and forth kind of choppy, whippy, whatever's going on inside of here. But it's spending the majority of its time on higher lows now. The last time that happened, we saw this kind of consolidation and then a really aggressive breakout to the upside. Now, we don't have as obvious of a consolidation here, but we can definitely see that there was a nice small zone right inside there, 80s to 75s, that were accumulated pretty aggressively. Obviously, given hindsight, it rejected out of there. But if we look at the volume node and see, you know, in hindsight, again, we know that it went higher, but what did the volume do? Sure enough, they're bottom weighted. So this is where buyers are buying into the lows. They're buying into the lows, and so far they're succeeding. I have no reason to do anything other than go long while this is succeeding. Now, realistically, if we look at this from the perspective of a reward scenario, if their average is here and their risk is here, realistically, they're going to be looking for a 2-to-1, which, I mean, I think we've already hit close to a 3-to-1 now. Almost. Go down just a tick. There we go. So the 2-to-1 for the risk on the actual was right there. 3-to-1 is a little bit further up. 3-to-1 is usually kind of the major final objective on these actual risks until it either just keeps ripping or it falls apart. So long as the buyers are defending down there, well, I can't really do a whole lot. But if this is going to be a range, theoretically speaking, then we should see volume coming in near the highs. So if we draw this forward, that's not what we're seeing. We've got the volume accumulation down at the lows, and then now we kind of gapped a little bit through, and then we got the pop right at the top, and now we've got the volume coming in at the highs. So this is what you would expect from a range. The only thing that we don't have from a range perspective is volume in the middle. That's not like a range. When you have a range, buyers buy low, sellers sell high, and what does everybody do when it gets to the middle? They take profit. So that inherently ends up being the POC, more often than not. Usually the POC is above or below it a little bit, but generally speaking, it's right around the middle of a range, and for good reason. That's where everybody's doing the same thing. We don't have that right now. We just have 3 nice little bumps in volume that are decreasing, which would suggest profit taking. Who's profit taking? Probably the buyers who built their POC down here. I think that's fair to say. So now that we're continuing back to the upside, we're seeing some profit taking. We haven't seen the tables tilt yet. We haven't seen those sellers come in. We haven't seen any of that. Until then, bulls will keep going. There's not even divergence on the highs. Just nothing. Bulls own it. Over on crude, more continuation to the upside, although we are pulling back just a little bit from yesterday, getting honestly, what we could consider a healthy pullback, really. If we look at the most recent larger dip to the downside, that ended up being about 3.8%. If we look at this next pullback, this is at 2.7. If we look at the pullbacks before that, from top to bottom, 2.8. These ones are very small. So it generally seems to be like 2.8 to 3. In this case, oh, actually, it did go just a touch lower, didn't it? Did it actually get to 2.8? It sure did. All right, well, they got to 2.8 as far as repetition's sake goes. But this is demonstrating some fairly obvious value buying. Buyers are buying on value, and they're doing it in a fairly repetitious way, about 3%-ish, give or take. So in order to get a good, what I would consider a deep value pullback, take that distance and double it. So if I have, let's say as an example, 3% or 2.8%, then realistically, I would want to see 2.8 and 2.8. That would put price at around 63. That's a double value pullback, which puts it right back at the previous swing. That's what we want to see. Now, if we can stack that with some volume, let's see what kind of volume they built up on this low. Oh, man. Ooh, now that's even better. Now we've got a POC retest cluster right there. We've got the double down value at around 63. It's just, this is where everything starts stacking up. Now, along with that, if we look at this from the perspective of continuation plays, actually, I think this came from lower, yeah. From the bottom, the original pullback, once they broke out of the range, ended up being an L3. As we continue back up, the next pullback was an L2. Got an L2 to L3. It's that perfect spot. That's where buyers are going to be looking for either confusion or trend continuation. Either way, they're still going to be looking for value buying down here. The only thing we have to wait for is for crude oil to actually show it. It's the same spot we were talking about yesterday, but a little bit more refined now that we have some more info. Now that it's gotten a bit more of a pullback, at least. See if they can go a little further. On the euro, fantastic bullish bounce off the lows. That was that wedge low. Unfortunately, it did it at, what was it, like 3 in the morning or something? It just wasn't a chance to really take it. And then when it finally broke out, guess when it did it? Did it around 3. So it's obviously, it's got the breakouts going, but it's doing it all in the euro session. to be fair, it's theirs. I'll give it to them. Okay. But, it's kind of a bummer for me. A lot of these moves are kind of taken off without me. Either way, there were a lot of other heads up. Massive undertow coming across the lows, giving a heads up of, hey, there's probably going to be a deeper correction. We were talking about that yesterday. Now we're seeing it. So as far as the seller's perspective, they're going to be looking for continuation down. They just held an L2, and then it rotated down into an L1. We're back to an L2, but we haven't seen any proof yet, right? In order for the sellers to actually take this lower, we got to see some lower highs or some type of movement like that to help us out. And if we look at the volume perspective and we draw that forward, the majority of the volume was still traded down here. Well, given that price is way above it, we already know these are buyers. We were talking about buying opportunities down there for a couple days. They bought it. They're in profit. What are we seeing? Profit taking. It's very straightforward right now. We haven't seen any shift in volume yet that would dictate that sellers are trying to take over. So bulls still have the clear runway. They have plenty of room to keep going, and L3 is the next logical point. If we look back at some of the previous sellers that came in on that last move up, they didn't spend a whole lot of time there. The majority of that POC clustered volume was actually pretty middle weighted, and that's where we're seeing a lot of this resistance. So you can see, although this is reversing very aggressively to the upside for buyers, the opportunity to buy isn't up here. It was down here. Right? Now that it's up here, that's chasing. We need to get more proof. We have to have some emphasis. Hey man, what's the tool for the volume boxes called? That is the order flow volume profile. If you look at NinjaTrader, you do have to have the license. It's really it's really crappy that they kind of pigeonhole people into that. But if you don't have a license, you're not gonna be able to use it. If you do have a license, a lifetime license, you can use it. It's the order flow volume profile that was added, I don't know, like 6 or 7 versions ago. But you can find it right in the little tools drop down. I added a shortcut command just to make my life easy because of the amount that I use it. So. And then just so you, excuse me, just so you see it, because I don't know if it's something that they added more recently or if I'm well, I know I'm blind, but in TradingView also has it. That was again, I don't know if they added it more recently, but you can find that right over underneath this little drop down here. That drop down there, and it's the fixed range volume profile. Slightly different name, same concept. I don't know how long it's been there, but I didn't realize that was there until like a couple weeks ago. So maybe a little longer than that now, but anyway. Euro continuing to rally. Bitcoin pumping back up to new highs and pulling back, just a shallow pullback after that continuation so far. We've got nice movement to the upside. Great pullback, deeper pullback. You can see they're kind of rounding out a little bit. They're having some trouble. We're going into a transitional phase. This could simply be sellers trying to build a position to drive the market down. If they are, where do you think they're going? 50,000. Right? I think that's pretty obvious. So if the sellers do get that flush to the downside, bingo bango, that's where it's at. I want to be keeping an eye on that 50K, on that pullback. If we do try to go lower and it fails, we should probably have a couple bounces off of that before it goes screaming higher. But the objective then would be reversing back up through the highs, similar to what Ethereum's doing. Break into all-time highs and keep cruising. Right now, we're kind of on a decision. They're trying to figure out who owns it. Ethereum, everybody knows who owns this. There's absolutely zero questioning who owns this. There still has been only the one pullback. And that depends on your data feed, by the way. Coinbase, the data that the NinjaTrader is coming through, has not had a new low. The only one that they had, I believe, was... Actually, no, I think that was a higher low, too. Yeah, that was a higher low, too. So Coinbase hasn't had a new low for ages. It just keeps... I don't even know what to say about this thing. This is nuts. It just keeps going higher. Eventually... Ooh, that's fancy. Eventually, there will be a pullback. Guaranteed, because there always is. So when that pullback does happen, given how massively and incredibly bullish this thing has been, I doubt that a lot of buyers are going to be thinking that they're going to let their profits dwindle and give it all back on a deeper pullback. I just don't see that happening. More realistically, that will create a panic flush. And that's what we were talking about, that deeper dive, looking at like, what was it, 28 or 30%, 32%, something like that. I'd have to look at TradingView again. Those are those deeper moves that you're looking for on that pullback. Or no, actually, wasn't it 41? Hang on. Now I'm messing myself up. Let me look back. I believe we were looking at a 4-hour chart for that. From there, that was 23, then it was 22. There's the bigger one. What percentage were you again? I don't remember. 37. I think the one number I didn't say, naturally. Thanks, Murphy. We've got 37% is the natural pullback on Ethereum. So realistically, if I'm going to be looking for a value pullback, then that's got to be at minimum. Again, Ethereum is incredibly bullish. So for me, if I start seeing it back like 15%, 20%, I'm already paying attention because I honestly believe the rest of the world will be paying attention too. It hasn't dipped. But that said, if we can really start getting that pullback, that's where everything starts totally flipping the script. It's not just buy the shallow dip, look for a continuation, XYZ standard stuff. If you look at the 37% pullback, which is what the last major pullback was, where does that put it? There's no coincidence that these things line up right now if it does decide to pull back. A lot of times you'll see the market kind of finish objectives so that it can create entry points back in previous zones of structure. Now, whether it's coincidence or not, I when it comes to the markets, I don't believe in coincidence. But it's a definite scenario of interest that we've got to keep our eyes on. And although I don't want to see Ethereum drop 37% by tomorrow, it would be a major zone of interest to keep our eyes on. And it's definitely possible. That last time that it dropped 37% was over the course of, how many days was that? 1, 2. Yeah. So, something to keep in mind. Took 2 days to drop 37%. Looking back at what's going on from the US session on the NASDAQ and kicking off from there on the daily, we are continuing our pullback, and the market closed yesterday bear. It closed it bearish. It's an inside bear bar, obviously. The previous bar was massive. It's going to take a minute to get outside of that. And very likely, the top and bottom... Okay, let's try that again. The top and bottom of this huge candle is going to be a major zone of interest, both as support and as resistance. Or, if you're a buyer, profit-taking, whatever. That's going to be the area that a lot of traders are going to be looking for. That's why I was flashing. It finally loaded. If we do want to get a little bit more of a pullback as far as the previous dip goes, then realistically, we're still looking back at those 12,800s. And this is a great start to try to get that done. If you look at a double down, as an example, that would actually put it underneath. So from the perspective of ABCD legs, that puts it pretty close. Right around that area, give or take. Value, value, value. Right now, we're underneath the near moving average. Sellers are continuing to try to drive down. The rising support is closed underneath. We still have the support at 13,453. We haven't gotten underneath it, but that's about it. They got to show up to the party here. Over on the 60-minute, we can see the fight that's taking place. We've got those jeez, that drive down, incredible move after that quick little tap on the high. That's nasty. If we go all the way down to the low, back up to the highs, because that's how they played it, that like one tick new high and reversal all the way back down. Switch this resolution to minute so it actually shows up in the century. We can see what happened. We saw accumulation up to around the POC that they built at around 22 quarter. After that, it was profit taking. So until we get back underneath that, sellers don't have a case. They got back underneath it. They kind of chopped back above it, got back underneath it again, showed resistance, sellers have a case. And from there, it was game over. Just decimated all the way to the lows. Again, this does not mean that the market can't pull back up to the highs again. This could very easily just be a deep dip before a full reversal all the way back up to the highs. Especially on the NASDAQ. We've seen that happen millions of times. Happens all the time. But as it stands right now, I have to assume that sellers are going to at least be giving it a shot on this most recent move higher. My one concern, and a very obvious concern, I feel like, we've separated away from the moving average cluster, especially down here, very, very far. That pumps the mentality of a reversion to the mean, and it usually, more than just a quick little, like, yes, they did pull back here, okay? Yes, that was a reversion to the mean. What I mean in this case is that the market moving averages, regardless of the ones you're using, fast, medium, slow, right? Your favorite combo. These are just random ones that we got from Google a couple, like last year. This area, when they start congesting, right? When you see them stacked up on top of each other, that's what I'm talking about, right? Seeing them chop back and forth. Yes, it's reverted back to the mean, but very typically it's got to go all the way back. Kind of like what we had over here, where it just had the huge blow off to the highs. It separated too far. It had to snap back. It separated too far. It had to snap back. If it stays down here, then more likely than not, the moving averages will catch up and it'll probably stay range bound. It's a good sign for bears to try to get another leg. Right now, the POC's at the bottom. So on that whole move down, wow, that's crazy. Let's go back to over here. Let's get more context. There we go. Go backward. All right, so the 905 POC is still there. They drove down, slight accumulation phasing going on at the base, and then we've got today's price action, which is kind of adding to that zone. We're stuck on yesterday's open. We're just stuck. This could be a nice spot for them to build volume. You can kind of see it. We're just going to have to stay around here for a while. That doesn't help. We got a possible wedge. Market's trying to break out. That wedge does not look good, though. I don't like the way that looks at all. The structure's so weird on this one. Let's look at it from down here. Got that L3. Confusion. Not sure. We break up. Continuation on the trend. No pullback. No pullback. Finally got the pullback. L1. And that's what it was, really. L1 buyers were trying to defend. But again, everybody bought the dip and everybody does the same thing at the top. They all took profit. Market slid all the way back down. Now we're hovering in L2. You can see what they're trying to defend right now. So it's on the launching pad. If the buyers are going to take it off the top of L2, this is going to be where they do it. 928 right around the corner here. That's the last little batch of volume before we go into the open. And then finally on the 15, if we're looking at this from the sell side perspective, which I feel like we're kind of forced to, from the bottom to the top of the move. I've got that bottom weighted POC, which is down here. Yikes. Asian session rotated up into the Euro session, but now the Euro session's back down into the Asian session. A little bit congested. Traders got to figure out what they want to do here. One minute until the open. From the trend perspective, although at this point we really don't have much of one, buyers would have tried to get continuation to the upside. Beautiful L1, and then it just rifled right through the L1. L2 got back to the top, back down. L3 back up to L1. You can see the L1 buyers were given 3 chances to get out. Hasn't rolled to a new low, though. Not yet. Technically speaking, they're still holding an L5. See what kind of volatility the open brings us. All right. Open hits, L5 continuing to hold. Major POC cluster of this move up that started yesterday. Back down at 13,438.50. All right. Here we go. We finally have the open going. We're trying to push back down. We're at that 53 area, that 453. That's the retest of the L2 on the daily. Oh, lordy. Did they get a brand new low by like a tick? Yes, they did. Uh-oh. They got them stops. Trying to reverse down to a new low. More continuation down. Open volatility is just kicking in. So far from that perspective, around the 480s, if they're looking for continuation down. We just saw invalidation of the bulls, and we still have a downside objective a little bit lower at 38.50. So as long as that's there, the next retrace still is viable for a continuation down. And that would be the spot around the 480s. Still continuing to the downside. Now, 38.50 is just the beginning of the zone. That doesn't necessarily mean it has to bounce off it to the tick. But that's where I want to see the market congest, go sideways, spend a little bit of time, and that would be the area, especially on the options side, where buyers are going to be utilizing it as a zone of interest. They just got to show up a little better. Market continuing to the downside. $38.50. The objective's right there. $13,438 major objective is upon the markets at the moment. No reason to have to be the first one to the party. It's broken through it initially. Now back above it. Notice as well, we do have a slight undertow going on. Very macro or micro view, though. Really, really minuscule. That would be the next one. They're hovering. Breaking through the 438s. Going down to the 420s. And they meme it up. Got the first 5-minute candle on the S&P. The first 5 is at, oh geez, at 55, way at the bottom. Yikes. And then as far as the NASDAQ goes, it's 50. I believe, right? Yep. There we go. 13,450 is the volume node. 13,438.50 is the major point of interest from the 60-minute, or 15-minute rather. Back up to the 450 area of, well, previous potential support resistance, whatever they want to call it. Now, imagine on the daily perspective for a moment why buyers would be buying down here. Right? If your risk is underneath this, but your intention is to get a bull engulfing candle to the upside, that's pretty good reward, right? A lot of buyers are going to be buying into that move. We've now been handed a little bit more proof that this 13,438 area is of interest. Sellers continuing to pull back. We've got a middle-weighted POC hovering back in the 38.50s. Now topping up in the 48.75s. They've got to break back through the 38.50s if they're going to carry it lower. And this is a major zone of support that's demonstrating some support right now. That give a new high? There we go. Now we can go over here. POC shifting up 59.25. Top weighted POC. They're trying to sell into this move. They've got to get it to go back down again. They can't get it. All right, watch these 80s. Major zone of interest when we start pushing back into these 80s. I don't think we're done messing around at the lows, so I don't mind necessarily shorting, at least as a scalper on the first attempt. Big pop in volume back to the upside. Now, the sellers did try in the 80s or so, and realizing in the 80s, there's a couple different approaches. Now that we're breaking higher, they've invalidated that zone, so exiting and just accepting the loss. The other point of interest is that a lot of these sellers will be looking for that short move, and it failed, obviously. The POC for them down at the lows, 59.25. The expectation is that we still get that higher low pullback, because I'm not expecting it to V-bottom out of this 38.50. Once we can start pulling back down into this 80.50, that would potentially even be a long reversal. Unless they build another POC up here. They're trying. Holy crap. POC just shifted to the upside. Again. I'm still going to look to try to keep the risk as minimal as possible. They're breaking back above the 495s. Euro session lows would be next. Yeah, what a bounce off that 438. I was expecting a little bit more sideways action, but obviously I was wrong. So, given that, obviously a lot of sellers are still trying to accumulate into this, otherwise the volume wouldn't be showing up like this. Those sellers are still underwater. I'm not going to look to do much until I see those sellers adjust. Now, if we can still get a move back to the downside, again, this trend isn't necessarily over. I would still love to see a quick retest of the 450s. We've got an actual risk objective, which puts... Did that put the 2-to-1 directly on top of it? It did. Okay. So the 2-to-1 objective is, it's actually kind of hard to see, but it's down at the 38.50s. POC breaking down, shifting a little bit lower, prices under it. That is a truck ton of volume coming in. Lordy. Still hovering. S&P got a continuation back to the upside, but now fading back on itself again. Just a lot of back and forth. First point of interest is going to be back into those 80s. There's a really obvious VVP just underneath it, though. They might be able to pop through it. There's like, where literally no volume traded. None. It's totally empty. Beautiful flush back down to the 80s. Keep going. First position off. Keep flushing. It's backing up too much. I got to jump ship. My original entry was obviously very wrong. And again, my intention was not to make anything on that trade, although it did work in my favor in that way. The intention was to get out of the trade. I was very obviously wrong. Keeping the risk as minimal as possible allowed me to still kind of flex a little bit, driving the average higher. But it dumped underneath it, which was very helpful. Thank you. Sometimes you get lucky, I guess. But again, just to clarify, the intention of that trade was not to get anything out of it. It was mostly just to mitigate loss and get out. I wanted to see that snap response and drive straight back down again, at least back to the 450s, but they couldn't get it done. Now, this move up will have taken a lot of shorts in a little bit heavier than they would have wanted to. Again, it's very obvious accumulation. We saw the sellers selling the whole way up. But now that we're back in that profitable territory, if this fails to continue again, that's a big problem. Sellers aren't going to hang around anymore. Right? They know we just bounced off a massive zone of support, and it responded incredibly well. So if they can't get the dip back down into these 450s to exit the rest of their shorts, if they're still short, then they're probably not going to hang out too much more if it breaks above the 495s, 500s. Kind of game over. Yeah, the sellers have taken over at this point so far. They're trying to get it to roll back over. And again, the only reason I jumped ship on the entire thing is because the first two came off at my original break even, and then it went down, up, down, up. I'm like, nope. I can't do it. I need to make sure that I've got this covered, and we're at about a 1 to, well, from an actual risk perspective at least. Yeah, it was bouncing off the 2 to 1, so it was the right decision, just a little frustrating in the way that it worked out. Next objective is going to be down at the 438.50s to see if they can get down there. That's where, if you're looking from the bulls' perspective, we've already had proof. That's already been given. There's very obvious proof. That doesn't necessarily mean you got to be the first one to the party still. What I would rather see, in this case, would be the market coming back down and show me a very obvious bounce. Right? Do something like that. And then look for the last one right there. That would be much more preferable. Of course, I said that about over here and it left the station, so I don't know if we're going to get that. Definitely having a bit of difficulty around this area. The S&P still hasn't gotten away from the first 5 minute. It's just stuck. Incredible bounce on the 15 minute for the NASDAQ. Still having some trouble, though. Looking on the bigger picture across the board, crude oil, I mean, it's still hovering in that zone of interest, but I want it to go quite a bit further down, at least dig into the 63s. Gold has gone nuts to the upside. Bulls still control the market. The euro continuing higher, back up into... Okay. We're back up into the zone. So if sellers are going to defend, that's going to be the point where they're going to try to sell, and so far, that's not been working in their favor. So if we gain a bit more separation up, that could be a nice little launching pad for a short-term bounce. Still pretty early, though. S&P, big old bear bar to the downside. We're in a range. So, I mean, when we look at this, do I really want to be a seller way down at the lows of the range? Probably not. Seems like it's a pretty bad spot, actually. Probably more beneficial to be a buyer down here, right? So the way that this is kind of setting up, if we look at some of the previous historical breakdowns, the last breakdown went from 51.50 to 53. And then if we go a little bit further up, that one was like a one-tick breakdown. You know, that might offer up a really nice wedge. Possible wedge bottom. So, although we are bouncing off that major zone of interest, I would kind of like to see it get down there one more time. Sort of curious on this move to the upside. Data doesn't work. Cool. Go a little further forward. Nope. Further. Nope. Further. Please, data. For God's sake. Okay. This thing drives me nuts. Well, I don't know reliably where the POC is. Thanks, Ninja. Well, either way, we're in a range and we're off the lows. I don't really want to do anything other than be more a buyer than anything down here. Sellers did get a bit more continuation. If we look at the overall move from the bottom to the top, they created that POC up at the highs. So again, sellers are definitely doing just fine. If we look at the actual risk perspective, we can see we're starting to, now with this more recent high, we've got that area of 2-to-1 hitting there. So sellers still hitting their objectives, just not down as far as I would like it to go. Needed to get down to those 450s. Sellers trying to get a bit more continuation to the downside. $10 right around the corner. Although there isn't any major news, it could still sometimes throw the markets around a bit. Bit of sideways, bit of meh going on. Need a bit more info here before we can get anything moving. Still trying to make a decision. And right now, keep in mind, sellers are still in control in the short term, and they're still in the profit. Got to get that dip down into the 50s, 40s, 30s. If you look at the overall POC cluster, at the moment, it's at 13,473. The impulse POC is down a little bit lower, 473. That's what they're trying to hold off of right now. I want them to go further down. Come on. Don't mind my caffeine. Got a new G Fuel. It's the, what was it, the Bobby Boysenberry Bubba, whatever it is. I don't know. Tastes exactly like the Dr. Disrespect one. Now that his face isn't on the tub anymore, hashtag just saying. Rebranded. Can't do that to the doc. That's not nice. More bullish continuation to the upside. We've got the settlement at 490. I mean, this is such an awkward spot to have the settlement. The bulls want to try to get more continuation to the upside. We just bounced with an epic bounce off the lows. And at least on the 15-minute chart, it was all wick. So huge bounce off the bottom. Buyers are trying to get that higher low transition, get that accumulation phase going, etc. So watching the bulls coming back here, they've really got to stick the landing above these 473s. And right now they're just not. They can't get any separation away from it. Every time they get just a bit away, get sucked right back. They've got to really get away from it. Get some proof. Especially considering the zone that I want to buy is further down. I'm not going to jump ship too quick. Or, well, I guess jump on board too quick. Whatever. Bulls continuing to demonstrate some support. Whoops. I fat-fingered my my shortcut command there. I meant for my F8. There we go. Bears back down. Still no separation away. Big bull bar to try to get the job done. Now, buyers on the aggressive will hit that real fast. Shorter term buyers will look at that thinking, cool, we've got some proof. Now give me the pullback. That pullback might never happen. Keep in mind. That's always the caveat. We're back above settlement. We have supported that last POC hold, and we're continuing to show support off the 38s to 50s. See if we can get a quick little back tap to those 73s. Bulls attempting to get more continuation up through the highs. Bottom of the Euro session from earlier is at the 514 quarter range. Now, we haven't... Yeah, they haven't broken a new high, but if we look at this rotation for now, at least, we've got... Oh, man, it wasn't even a 4. It was an L3. That's tough. Get back to those 73s. I'll be a happy camper. Even if they go above the highs. That's fine. That's just more proof. We've got a near high miss. Buyers still waiting for that quick little back tap to 473. S&P trying to break above the previous bear bar. We already know that that bear bar was a terrible spot. If sellers are trying to fade above these highs, it would be likely that they would do it at like 61. Noting that we are in a range, though, I don't really want to go with the short side. I would rather allow the sellers to take it from 61 and see if they can get their objective down in the 60s or even a 2-point objective at 59 and look to be a buyer there instead. $59. There we go. 49.50 is the scalp. NASDAQ hits and flushes right through it. Objective taken out on the S&P. Keeping sizing on the NASDAQ on the lighter side. I'm not approaching it as a scalp per se. I like this area from, obviously, the 15-minute perspective. It's a huge zone. Oof, we're finally getting that flush down there. I didn't get a fill. All right, 450s? There we go. They're finally offering up a little bit of a deeper move here. 38.50s is the big one. We do have a new low as well. Now, conservative timing, again, I'm taking the slightly earlier entry after we've gotten, or at least gained the first bounce proof. So building into a position in that sense is already kind of conservative. But what I mean by super conservative, I guess, would be the scenario here. Would be an obvious break and continuation with a new POC. So the market's continuing to pull back. If you're looking at it from top to currently the new bottom, that would put it at 73. So if you want the safest, I mean, like the latest to the party on the planet, that would be a break back above, preferably even maybe to a new high, and then the snap back to 73. It's super late, and again, you know, the later you are, there's chances that you just don't get it, but that's the spot at least. 2-to-1 upside objective initially at 775, but remember, that's off of the 500 tick. I'm also deriving this from the 15-minute basis. And if I'm looking at it from that perspective, we have upside objectives that are back up at around 564. 5... right there. There we go. I didn't see it until just now. Tapping underneath that previous bull bar in the S&P, buyers will be fairly interested in that zone as well. 29.75. Oh, back down to the lows? It would still be a higher low. I mean, this whole area, remember, this is a 15-minute zone. So by no means is this a small little area. Ooh, nice. 38.50. I'm going to have to modify if it goes back up because my average is drastically different now. But as far as this zone goes, when you're looking at these areas, remember, we're looking at a 500 tick based on a 15-minute level. So it's kind of like, you know, you expect to see a lot of chop and slap. You're looking through the microscope when you're zooming in that close. So you expect to see a lot of sideways, a lot of blah, 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 blah. So when you're looking at what I was talking about, the safest approach in waiting would be that zone of interest to hold and bounce. I'm building into a position, but if you're taking the safest route, you're waiting for that higher high continuation trend shift, right? That's what's required for a trend, higher high, higher lows. They got the higher low, but they missed the higher high. So they could still very easily dip underneath the lows. $29.75 is another great spot. I mean, the lower the better, really, because that's just driving your risk even further down. And keep in mind, the break point for a 15-minute like this is significantly larger. You're looking for a full-blown reversal, which means that the break point for something like this is way down at like the 325s. So this is, by massive definition, a swing zone. S&P trying to chop through the lows. I'm kind of curious. If we go way, way out here, when the market was rallying higher from the base, we had that big pop. That was that volume node right back there. 41.40.50. $41.40.50. That puts it at that previous major POC on that last impulse leg to the upside. Although it wasn't the full one. I mean, that whole thing was all the way up here. It's still a zone of interest as it continues. And if we go up to the next major high, the next major high. Oh, that's right. It doesn't work. Awesome. 10 o'clock. We don't have any news at 10, but 10 o'clock is there. Diving a little further down. I want my overall position to be around 5 would be the preference. And right now my average is right in the hot pocket where I want to keep it. Now we just got to wait for the market to kind of respond a little bit more. As far as actual risk, we haven't really gone far enough for me to care too much about where that's going to be, but I mean, at the moment it's at around 501. Yeah, right inside there. Perfect. Give that a little bit more time. I'm zoomed way out on the S&P. Hang on. Let me zoom back in here. Well, I mean, the problem with other swing areas of interest is none of them are really giving anything worth much. That's kind of the issue. We're away from everything. Like the S&P, we were talking about how the sellers are dominating the volume. It's still underneath it. It's got to go a little bit further down. We start dipping into the L4s, L5s, and we show some sideways, sure. But we've got a long way to go. The S&P is still bearish and breaking lower. It's having some definite difficulties. And on gold, it's screaming away and never pulled back. So there's not really much to do on gold until we at least get a little bit more info on that. Crude oil is getting close. Hang on. Crude oil is getting close in this area at around, I mean, they're sitting on the original pullback, 2.8. From a value perspective, buyers will be buying this zone because that's how much it typically pulls back, around 2.8, 3%, some as high as 3.8, but around that area, and we're hovering on top of it right now. For me, I want a double value pullback, meaning that's got to wait until about 63. Or more info. At the moment, I just can't do anything on crude. The euro, we're starting to separate. But we need just a bit more proof. So everything just needs to wait a little bit longer. Uh, 2-to-1 is a little bit lower now. And 3-to-1 would be the major. I don't want to get rid of all of them. And then the final one is on that big... What was that price? 562? Yeah. There. We still haven't made higher highs, higher lows, so probably going to have to jostle my position a little bit, rock the boat, if you will. I'll eat the loss on the first position because it's really not, honestly, that bad, all things considered. And that drives my average in a near perfect spot with the sizing that I want. So I'm okay with this for now. I'll let it find some balance. As far as this move goes now, though, that does mess with my average just a touch. 2-to-1 is in the 60-50s. There we go. S&P still just kind of choppy, gross, not really a whole lot going on at the moment. What do you think of the Bitcoin 5-minute slide? Let me take a look. BTC 5-minute. Hang on. Where am I at on this? Oh, they're just hovering back at break even again. All right, cool. Hang on. Real quick, just in case they give me another one. Throw that order underneath the bottom. This 5-minute slide lower, the first thing that very obviously stands out is the last few legs to the upside were not very long-lived, right? We've got this initial drive higher, fairly short-lived pullback before rallying really aggressively back up. And even these pullbacks were really microscopic. But then we get this one, and it goes and fails to go up and back down and fails to go higher, makes a new low, fails to make a new low again, tries making a new high, fails, makes a new low. There's a lot of positioning happening in this area. So what this is creating is a scenario that you've really got to be careful of, because what are they doing in here? Are they buying? Are they selling? What kind of fight are we in? They got a new low, so we can go all the way down to that base. Well, looks like they got a pretty heavily bottom-weighted POC down there. Realistically, if they pull back now, 56,836, that's a pretty big spot of interest. So that would be the spot. There you go, bulls. Got a little more work to do. All right, now that I'm present. It's really hard to see with that on there, isn't there? Let me get rid of that. Looks like a fake break to me on Bitcoin maybe leads to a breakdown. That could definitely be the case, sure. And a breakdown would make a lot of sense to get that deep dip back into the 56,800s. If they're going to dive lower, though, then you've got a lot of swing before that to work with. Right? You've got this whole giant move to the downside that you can kind of utilize as points of interest. If we zoom out a little bit further. Okay, that was the actual high over here. So if we go over here down to the lows, that would give you one more to keep your eyes on from the bullish perspective, at least. That would be back at 55,720. But, I mean, if they start losing ground under that, it's kind of game over at that point. You know, they're only going to try so many times. Oh, that's the wrong screen. Put it over here. Having that up there at 62 makes it really difficult to see the chart. Did they make a new low? Oh no, one tick from. Woo. Alright, I gotta widen this thing out, otherwise I can't see There we go. So 2-to-1 objectives in the near term, on the actual at least 60-50. But remember, this is a 15-minute chart type setup, so I am looking for wider objectives quite a bit further, all the way up into the 562s. More lower highs. So we know bulls want it, otherwise they wouldn't be buying it. But if it breaks down again, I've got to assume that a lot of the buyers are probably going to give up. The slide down could be pretty nasty, so a lot of buyers don't want to sit through that if it does break down. So a lot of stops will be underneath the lows. I already know that risk going into it, but the next balance point that they find will usually mean they'll come back to this area and then try to exit some of them at break-evens, etc. Given the gross vindictive nature of the way this is moving, I'm going to lighten the load a little bit early and then try to gauge this secondary follow-through move up. There we go. Now my average is in almost, literally a perfect spot. Nasty bear bar back to the downside. See if you can get a little bit of a... They still haven't gotten a higher high, which is why I'm lightening the load again. They're not able to get the job done. I don't want to get rid of the long. I love this area for a long, but they're not showing up to the party. Come on. It's a good start. They're back above that 38.50 area. More continuation. There we go. Still haven't had a new high. Come on, buyers. You know, it's right when I said that it went down. Really? All right. I'm going to jump ship on it. It's not following through the way that I want it to, and I would rather leave this as a good position rather than giving everything back. If they do come back down to this area at the lows, obviously I'm having some difficulty trying to figure out the best timing for this area, which usually means that either this isn't the low, which could very well be the case, or this is just a better spot for an options play. That we don't have to deal with all this up, down, up, down, up, down, up, down, up, down. Or micros, or reduced risk something. But this thing has got failure to launch all over it. See if we can get, again, from the option side, bulls will definitely be interested. That's, we just haven't seen any trend shift, anything. Higher highs, higher lows, something. We haven't gotten any of it. Sellers on the S&P fading above the previous bear bar's high, demonstrating more continuation. Although we don't have any candle gapping, that bull bar actually filled it. Why not just start selling? No, that's what I'm saying. I don't want to be long on the future side of things. If I'm going to take a long, I would rather do it on an option side so that I can focus on doing other things like continuing to short these failures. They haven't broken a new low, though. I would love to see that new low just to kind of finish them off. No, I mean start shorting. Right, that's the whole intention. For the longs on the option side, that means that I'm open to short on the NASDAQ futures. It leaves the door open to still be able to play both sides. I haven't seen the downside failure, though, so I don't want to short it yet. All these higher lows are not enough proof. Is this where short scalpers come in? Not until we break a new low. I mean, I'm sure a lot of short scalpers have already gotten in. There's a lot of really, really short-term opportunities. Second sell, I mean, you kind of get the idea. They're all over the place. But as far as scalping in the sense of like entering here to exit here, kind of like a swing scalp, I guess would be the best way. Maybe, but I would more like to see a breakdown with some proof first. It's fairly obvious that bulls have lost their grip, but all right, now we've got the breakdown. Well, maybe. Don't just snap right back up again, NASDAQ. Okay. Well, I guess this would have given the original POC somewhere in the middle here at around 27.75, 28. Still around the 28s. So if shorts are going to try to take over, the 28s would be that zone to try to do it from. We're still in a large zone of interest for the bulls on the 15-minute. Sellers still owning the short term, though. They only made one new high. And then right back down to a new low again. It's early. I haven't looked at the Bitcoin micro futures. If I'm totally honest, I would rather just trade Bitcoin. I mean, instead of trading the futures, which, I mean, that they're fine and dandy and that's all cool, but why not just trade the actual thing, you know? Kind of like stocks. There's, you know, for me, I would rather just trade the stock. I like different instruments. They have their uses, but my mentality with crypto is kind of the same. Like if I'm going to buy crypto, I'd rather just buy the crypto. Less leverage, of course, but you can just go to an exchange, and a lot of exchanges offer up to like 100x these days, so don't use 100x. Please. Keep it to like 4 or 5, maybe. Continued breakdown, following through with lower movement. Getting down to that 40-50 area, and we're getting a little bit later in the morning session here. Plenty of solid opportunities overall. They made that move down a little bit challenging, but would there be less commissions with Bitcoin futures and Coinbase? That's a great question. I don't know much about Coinbase. I don't use them. I don't like them. You know my position on them. So last I heard, their fees were incredibly high. But there again, you can go to other places like Femex or Prime XBT, and the commissions are like non-existent. And in fact, on Femex, as an example, you can pay monthly. I think it's like $10 a month or something like that, or you can pay for a full year, and then you don't pay commissions. So, I mean, or even reduced commissions, like Bittrex as an example. You get those little tokens that you can use. Binance, you can use those off fees and you get discounts. It's always going to be cheaper to utilize an exchange. The risk there though, is that you're holding your in this case, coin, in an exchange, not in a personal wallet. So with that mentality, I like finding exchanges that offer withdraws typically on the hourly or multiple times a day. So that way I can convert my whatever I transferred in to typically Lumens or Tezos or something that transfers really, really fast and is cheap and actually does what Bitcoin should do. Anyway, not going to go down that rabbit hole. And then I just send it over. And doing that conversion over to XLM or whatever, sending it out to a hard wallet or your bank wallet or whatever, and then sending it back the next day when you're ready to trade, I do that as a safety precaution, right? I would rather pay the 50 cents, or I mean, it's usually like 1 lumen to send. So it's like, I mean, literally 50, 60 cents to send as much as you want, really. So why would I leave my money on the exchange? You know what I mean? Like, it doesn't make any sense. I just look for exchanges that offer the ability to do that kind of stuff. That way I'm always in control of where it's at, what it's doing. Have you had some exchanges ask for proof of funds from you? No. I've had a ton of KYCs coming through again, but... All right, starting to slow down just a little bit. Market continuing to make new lows. No reason for bulls to come in yet. They gave it a shot on the way down. It didn't work. And they used that pop higher to exit. Myself included. What's the micro Bitcoin ticker? I'm not sure, honestly. Micro MBT. MBT. Hang on a second. I do not want to load a tick chart because I don't know what that's going to look like. Duplicate to a new window. 5-minute chart. Just lost my 5-minute chart. There it is. Get that over there. There was an MBT. CME Micro Bitcoin Futures. Oh boy, that's a fun looking one, huh? Look at this bad boy. We got some spread on this thing. So this obviously isn't really viable for like a 5-minute chart. 60-minute? Oh god, the 60-minute looks terrible. Does anybody trade the MBT? On Prime XBT, you can have a minimum trade size for Bitcoin 001. They just lowered it from 01. Nice. So that makes it even easier. The bar to entry is getting lower and lower and lower, which is a good thing. That's how you regulate an unregulated market, in a sense. More people have their eyes on it, they can respond to action, and it stops that craziness from happening. It's kind of a self-regulated mentality in a way. Unregulated in the sense that Doge to the moon, but, you know. It just opened today, believe. Oh, okay. Well, that might be why the chart looks like garbage then. So maybe we'll come back to it in a month and see how it looks. But I wouldn't trade it as it stands, that's for sure. How can one... What? Maybe hit enter while you were typing the rest of the sentence. Oh, hang on. Let me go back. I see you did type a couple other things. They got mixed in between a few of the other. Has not much data. How can... Oh, no. That doesn't have anything to do with it. I don't follow you. I'm not sure what you mean. Anyway, we are moving into training time, so feel free to get those questions in. We'll get those covered for you. Been sarcastic. How can one trade with no... Oh, I got you. I got you. Sorry. That's my blonde moment. I'm allowed one a week, right? All right, tick the box. Got it. Went straight over my head. I don't have any hair up there to catch it anymore. Let's move into training time. Feel free to type those questions in. We'll get those covered for you, and we'll wrap it up. What's one of the biggest things that you utilize to exit a trade when it's going wrong before it hits your stop? Well, that's a really good question. So, like, is a precursory, like, hey, you need to get out of this, heads up kind of thing? I mean, you know my first answer, right? Context. Who didn't see that one coming? There are a lot of things. You know, as an example, when we're looking at the NASDAQ's a great one because I was trying to build into a long and I jumped ship. Why did I jump ship? The major zone of interest that I wanted to see hold was here. Now, remember, this is a 15-minute zone. I'm not expecting this to just go boop. I mean, that'd be great. Cool. You know, I'll be along for the ride if it does. Thanks. But that doesn't happen more often than not. If it does, then you can get some massive runs out of it. Those are some of the best. But 7, 8 times out of 10, more realistically, you'll usually have that move. It'll bounce, kind of bounce around, dig around a little bit. Then you'll start seeing this transition where it'll go higher high and then higher low. And it might wiggle around in here, but generally speaking, these all end up being higher lows or at least not breaking that major one. And that's the transition that I'm waiting for. But what I want to see is I want to see them utilizing the support to their advantage, right? I want them to be bouncing off of this. And it's okay if they cut underneath it a little bit, like, you know, if they dip underneath, that's fine. It's the market. It's not going to be perfect. But generally speaking, it should spend the majority of its time above that area. And then we look at the one that I was trying to get. This is that level. You see the problem? Like, I'm okay if it goes underneath it a little bit. That's fine. But then it goes back up, fails back down. Goes back up, starts failing back down. No thanks. I don't want it no more. Get me out. It's a no-fly zone. It's failed. It's spending the majority of its time under. It doesn't mean that I can't go long off of this area, but I've got to wait for the market to separate and then do it again. But this time show it on the right side of things. So. In crypto, has anyone bought each on the 5th? Well, I guarantee you they do. Yeah. Because the cool thing is, if you're not trading with any leverage, I mean, what a lot of people do, which when the market crashes, they kind of regret, obviously. But what a lot of people do if they're wrong and it's crypto, they just hold it. Right? It's like, oh, I'm wrong? It'll go up. I'll give it a little more time. That's an incredibly dangerous mentality, obviously, because one of those times it won't. There will be an all-time high at some point that it pulls back off of for a very long time. And then later on, it'll go to all-time highs again. It's a cycle. But a lot of traders will approach it that way, where if you're looking at like a 15-minute, I'll buy that pullback. Oh, it's going further? I'll buy that pullback. Oh, it's going further? I'll buy that pullback without any scalable justification. No reasoning, just, oh, new low, buy it. New low, buy it. Hey, stochastic went down, buy that too. They're just buying everything because, well, if they're wrong, they just hold it until it goes up and they're right. That's one way to approach it, I guess. My concern with that mentality is if I were going to approach it that way, I would rather do it in a much larger picture. Instead of a 15-minute, as an example, do it in a less active sense on like a 4-hour. Maybe not a daily. Daily might be too slow, or an hourly. That way you've got time to kind of adjust, and it doesn't have to be huge sizes or anything because you're looking at big distances instead. It's a way that you can kind of mitigate your risk if you're wrong without going nuts. Now, it doesn't mean you can't do that on a 15-minute chart, but that would be better off on something like FEMX or Prime XBT or something like that where you can trade on a leveraged instrument day trading like we do with futures. Same concept. So the 15-minute perspective would be fine. It's just, it would be better off on a leveraged side of things just because the moves are going to be a lot smaller. And you would obviously want to use stops or at least mental stops of some kind, some way to get out of a bad trade. A lot of exchanges, the one thing that I love about exchanges, have liquidation prices built in. A lot of people will use those as their stops. Like, oh, I can fit a 10-to-1 leverage on this and it puts my stop underneath the lows, liquidation price, underneath the lows. Perfect. That's my risk. My trade costs, however much this costs to buy. Still give this a little bit more time. Sellers still in control. On the last leg to the upside, we've got a top-weighted POC. So here would be another example. This isn't a level that I was watching, but as an example, if I wanted to sell this and I were trying to sell here, the majority of price action is spending its time underneath that area. That would be a good sign from that perspective. It's very straightforward, but once you realize there's been a shift in that, it's time to start reevaluating. What's the difference between a 1440 chart and a daily chart in terms of how they look, if any? So a 1440 minute chart allows you to adjust the data series. You can change it to default 24/7. You can change it to ETH. You can change it to RTH. When you show a daily, it only shows you, regardless of the one that you pick, or at least it used to, which is why I started doing 1440. It would just show you ETH or actually, was it RTH? I don't remember. It would always show you one, and you didn't have a choice. It didn't matter what you changed the data series to. It was a daily chart. That's what it showed you. That thing, it drove me nuts when I was trying to find daily levels. So a 1440 minute chart, that's how many minutes are in a day. So by utilizing a 1440 minute chart, it's the same thing as a daily, but then I know that my ETH, my RTH, my data series are working properly because it's forcing my chart to break down the candle by minute. So it's more accurate. Now, that might not be the case anymore, but it's force of habit these days, I guess. I've been doing it for so long now that it's the 1440, that's the daily to me. I don't know. But it used to cause issues with the data series, and this makes it more flexible. Major undertow going on these lows. Pretty big divergence. Buyers trying to get it to go back up. If the NASDAQ and the MNQ are two different products, why is the price generally the same with different volumes? Because if the price deviates too far away from itself, algos kick in and start scalping it back into normality. Those are... wow, I'm having a brain fart right now. Correlation trades. So as an example, a massively correlated market would be the S&P and the Dow. Maybe not as much anymore, but generally speaking, the S&P and the Dow are very correlated. So when one of them goes up, the other typically does as well. So if you notice an abnormality where, let's say the Dow jumps 100 ticks, but the S&P didn't do anything, or it went up like a tick. Well, if the Dow keeps going higher, then generally speaking, that correlation is going to cause algos to start buying the other one to force it up and kind of in parity. Now, when you're looking at the difference between the micro NASDAQ and the NASDAQ, they are the exact same product. They're both the NASDAQ. So any difference in price by too much is going to get immediately wailed on by algos because it's a profitable scenario. Not for you and I. Like, I can't respond in microseconds. That doesn't work for me. But from an algo perspective, if they spot a difference of 2 ticks, you got to remember, the commission cost when you run a hedge fund, it's non-existent. That's a non-issue. You don't have to worry about commissions. Barely anything. It's just cost of business at that point. So they're able to kind of flex a little bit of muscle in that sense. So when it goes out of parity, they just hammer on with a huge amount of orders to get, well, not even necessarily a huge amount of orders. They just market by a few. And if it goes up by 2 ticks, if you don't have to pay commission and you can do that 1,000 times a day, that's really, really good money. It's the same mentality with liquidity providers. They just provide liquidity by offering up huge amounts of shares with limit orders and just letting it go, letting it sit there and fill the limit order, fill this limit order, fill that limit order. They're not getting paid for the trade. They'll make some in between, but they're getting paid by offering liquidity. There's a lot of different ways to skin it, as it were. But the main reason why those prices stay so close together is because when they deviate away from one another, algos kick in and they bring it back into parity. It just happens in such a small fractional time that we don't really see it. There's that too. Yeah, I mean, it's a constant game of cat and mouse. You know, oh, what do you think these guys did? Let's try to trap them. What do you think these guys did? Are they stuck? I mean, that's all I'm looking at throughout the entire day. I'm looking for stuck traders. Those are my favorites. Those are my favorite setups because even if I'm wrong, I still have the flexibility typically to get out generally unscathed because those are the hot spots. Those trap zones are fantastic when you're hunting for them. But eventually, every once in a while, the hunter becomes the hunted and then you get smashed. You know, and then the seats get expensive and then you got to deal with the ramifications of high-risk trading. Oh, well. Yeah, for sure. The seller's target, it's 50% retracement is the daily chart, 13,335. The objective right now, at least from what I'm looking for on the daily perspective, I still am looking at this zone as support. They have been unable to get underneath it and stay. They've gotten out and then gotten out again, but right now it's on top of it. They cannot get underneath this level. I would prefer to see a little bit of a drive down into the L2 or really what we've been talking about, that deep dip down in the 12,800s. That's where I really would like it. It might get there. Really. That's not that unheard of anymore. A couple more days of this. So I definitely think sellers have some pretty big objectives to the downside. In terms of measurable objectives, the next one's going to be L2. That's around 13,300. But the top of the L2 is really, really slamming this thing. They're having a hard time getting through. What's the favorite way to spot trapped traders? Any move that you weren't necessarily expecting that ends up or winds up with a very fast response. Let me see if I can... That is actually exactly the type of trap that I like right there. So like this is an example. When you're looking at this move, it's going down. We've got another low. That low is very weak. And then we've got higher low, higher low, higher. A lot of buyers are looking for that higher low continuation. They're trying to get that going back to the upside. And what did it do? It went down one more time. Just boop, poke the low, hit all of the stops because everybody stops underneath the lows and it would go screaming higher. Well, realistically, when you've got this kind of movement, it's fairly obvious. A lot of traders are going to FOMO this thing like crazy because it happened fast. If you look at the timestamps down at the bottom, right, 10:29, 10:34, I mean, it's a very, very quick drive to the upside. And in fact, most of this all happened within like a 10-minute span. So this it just went screaming to the upside. And with that kind of momentum, if there were sellers and they were trying to get this move going down, they weren't even given a chance to get out, right? That makes it even better. The fact that it never even came lower, it just straight up. I know they're stuck, unless they took their stops above the highs, of course. So if I'm looking for those traders to get out, I know they're stuck. Now I have somebody to kind of utilize for a story. I can build a story off of them. So then you can go backward, right? You can go back up to the top and say, all right, if they were shorts, the majority of those shorts were selling right there. Why would shorts be selling here? They were looking for a continuation leg to the downside. They failed. Where did the market come back to? Right there. I got it a little bit earlier than that. But that was the major continuation point. If the market ever comes back to that area, it's very likely going to be initially responded to as a zone of support. Buyers are finally being given a reason to get back in. That's like the earlier entry point, like finally. And you can see right there, dips underneath it a little bit, pops back up a little bit, back above. They're holding the majority of the time above. And then the next time it came back, something happened. They're spending the majority of their time below it. Still gives you a ton of time to exit. But buyers obviously did try to get something going there and they failed. It's still, if you were trading at 1 o'clock, it was a nice little opportunity. From the low to the top, it's a 0.34% move. So a good 40, 50 points. No big deal. Those are my favorites. They don't happen very often, unfortunately, but this would be another one, like right here. The market's continuing back to the upside. We saw the buyers give up over here, myself included, and it rolled all the way back down to the lows. The assumption would be that sellers are trying to get the leg to go down, and they failed. Starting to break back above. So if the market pulls back, these sellers are going to be very happy to get out if it gives them a chance to. That just became a very big hotspot. Now, of course, there's a lot more price action. It's made higher highs, so you can complete this whole thing, but the POC is still there. So if those were shorts, which that's my assumption, they're stuck in a bad way and they haven't been given a chance to get out. Other than like that really quick tap. There's another one to keep our eyes on. Probably get a bounce off that 26.25. Well, for now, unless something changes, of course. Anyway, I'm not seeing any other questions coming in, so that's going to do it. Another pretty good day. A little slower, a little grindier. Made us work for it a bit more, but overall, we're finally getting the rotation back to the upside. It's trying to get things going. We'll end it there. Good enough. If I missed any questions, feel free to shoot me an email. I'll get this covered for you from there, jhb@ssftg.com. If you want to watch the recording of today, all you got to do is rewind it on YouTube. It's right there for you. As soon as we end it, actually, I think you can just rewind it right now and you'll be able to watch it back. Either way, if I missed anything, shoot me an email, and that'll do it. I hope you have a great day of trading, and we will see you all tomorrow morning. Have a good one. We'll talk to y'all later. Thanks.